Hi, welcome to the Market Alert for Thursday, 2nd of May 2019. Yesterday the pound moved lower. Well, it moved higher initially and then ended up lower on the day. Bit of weakness, not too much selling around. The reason for this moving lower was late on after the session. You can see here that the market was up in the main event between these two lines here in the white area, and then when the FOMC announcement came out and they weren't going to change rates in any direction, the dollar rallied and the pound moved lower, and it has been sideways following this. You can see there range bound, but above the 200 bar moving average there. News for today, it's inflation report today from the Bank of England. That's at midday, and Carney is going to be having a chat at 12:30. So it'll be interesting to see what he's got to say. No doubt some Brexit stuff in there as well that may move the pound. Meanwhile, in the Dow, in the daily chart, you can see that we are down for yesterday, and the reason for this, as I've just mentioned, is that the Fed came out and said that they were not going to alter rates. They're taking a stance at the moment to keep things as they are, and then this caused a slide in the market. The market had already sort of priced in an expectation that there was going to be a rate cut, too many believing what Trump says in his tweets, and of course that didn't happen. The only thing that could move the Dow is a possible trade deal next Friday, according to CNBC. But we'll have to wait and see on that one. That's over a week away, and it's only a maybe at the moment as well. But going back to the chart, we can see that the Dow was down yesterday, trading up to 26,700 resistance that we drew in yesterday morning. Fairly quiet session there. You can see once we close back above the 200 bar moving average with some selling, the market then moved lower and traded sideways until we had the FOMC announcement. The market rallied back up towards the 200 bar moving average. Then we had two sell signals, and then in the post-market session you can see prices moving sharply lower there, as the reality that there was no rate cuts going to be coming, and prices moving sideways overnight. I'll just drag that back so you can see it's a fairly sideways move there. So what can we expect going forward? Well, personally, this market looks pretty tired, and there's an interesting article here, something I've gone on about the last few days. Is it time to sell in May this time? It's that time of year again. But this one may be different, confirming the old axiom to sell in May and go away. LPL Financial notes that the next 6 months have historically been the worst for stocks, seasonally speaking. And to jump to this set of data here, this is more important, but feel free to read the rest. It says, because historically when the January-April returns exceeds 15%, which is what we see here, 17.4. This is for the S&P 500. The performance for the rest of the year is paltry at best and at times a disaster. Now, given the backdrop of the lows in implied volatility as well, they're not getting the rate cut that they expected. There's no sign of QE. The market's already put on 17%. So frankly, it looks like we could see a bit of a correction in this market, and that's would be healthy to say the least. So what I'm going to do is to draw in to this high here, and this would be any sort of potential downside target. And of course, we're going to look at on the basis that if they try and ramp this back to the upside, then we're still going to take out these two as well. You've got to be flexible in your thinking, but certainly the backdrop with the low in implied volatility, the seasonally adjusted data for the sell in May, go away there also indicates what could happen during the next few months. I'm talking about a crash, but certainly the market correcting, and it favours that at the moment, unless of course something else comes out. Even the trade deal with China would only be a temporary lift, or give the market a temporary lift before then correcting. And in Bitcoin, still moving back to the upside, we can see here, so what I'd be inclined to do, but still not the greatest of daily ranges. Again, it's sporadic at best. I would watch this area here, 54.84, to see how the market fares should it continue to move higher. It's certainly holding its own at the moment, but yesterday on the intraday, again, you can see how tiny these bars are, and then we just have this spike here before reverting back to those sideways moves there. I mean, yesterday until this point we were looking at an average of $6 per bar, which is not tradable at this stage, unfortunately, but it is what it is. It did improve a bit through here, but yeah, it's not doing a lot at the moment. Okay, so that will do it for this one. Today, let's see how things pan out, but it's certainly weakish in the background of the Dow. Mays in Strasbourg, I think, were headed off there yesterday after PMQs, and see what Carney has to say as well with regards to Brexit, how it may impact upon the pound today. Okay, that will do it for this one. If there is anything to let you know about, I certainly will, but otherwise, as ever, thanks for watching. See you in the next one.